Hey folks, welcome back. I'm Alex and with me is Jamie. Today we're diving into one of the biggest mysteries in crypto, Caspa and Binance.
Yeah, the big question is why Binance hasn't listed Kaspa for spot trading yet, even though it seems to check every single box.
We'll break down the paradox, how Binance chooses listings, Caspa's strength and its unique fair launch, and then the most exciting part, what happens if Binance finally flips the switch and lists Caspa?
And when we say what happens, we're not guessing in the dark. We'll look at actual numbers from other coins, market studies, and even some scenarios of how Kaspa's big day could play out.
Let's jump straight in.
So let's start with the paradox. Normally, if a project has solid tech, a strong community, and high trading volume, it's a no-brainer for Binance. That's their bread and butter. List the coins people actually want to trade.
Right, every buy or sell, Binance takes a cut. The more activity, the more fees. And the reality is, listing hot projects early has been a goldmine for them.
Kaspa checks every one of those boxes. It's a layer 1 proof-of-work coin, but instead of the old-school blockchain model, it uses something called block DAG.
Block DAG is like upgrading from one checkout lane at a grocery store to 10 lanes, all open at once. Instead of waiting in line forever, Caspa can handle many transactions in parallel. That means confirmations in seconds, not minutes.
And Kaspa isn't some tiny experiment. It sits in the global top 100 cryptos by market cap, hovering in the $2 to $4 billion range. Daily trading volume? Often over 25 million, sometimes even 55 million.
Plus, Binance already has Caspa futures and even a mining pool, so they clearly know Caspa and are willing to make money off it.
The paradox is simple. Caspa looks overqualified, but the spot listing still isn't here. And as we'll find later, there are some very specific reasons behind that.
So how does Binance actually list coins? Think of it like applying to a really competitive college. A project fills out a long questionnaire about their tech, their roadmap, the team, tokenomics, and even legal compliance.
Then comes the due diligence phase. Binance checks the code for security holes. They look at how real the community is, whether liquidity is strong enough, and if the project looks sustainable.
If everything checks out, they move into the technical side, integrating wallets, setting up risk management systems, and finally making the big listing announcement.
But here's the kicker. Binance deliberately keeps its criteria vague. Phrases like long-term sustainability or community strength sound official, but give them wiggle room. They can pass or delay a project even if it looks perfect on paper.
That flexibility is key because it lets Binance time listings strategically. They can hold off until market conditions, regulations, or their own business incentives line up just right.
And that's why Kaspa's case is so interesting. On the checklist, it's spotless, but timing, economics, and strategy still matter. Let's look at Kaspa's qualifications. First, the tech. Kaspa is the first real-world implementation of block DAG. Right now it runs at 10 blocks per second, with a roadmap to scale to 100.
For context, Bitcoin does one block every 10 minutes. Ethereum handles about 15 transactions per second. Caspa is aiming for Visa-level throughput, hundreds of transactions per second, while still staying proof of work.
And the developers are relentless. They even rewrote the entire codebase from Go to Rust. That's like tearing down a skyscraper and rebuilding it with stronger steel, while people are still living inside. It shows both confidence and commitment.
The community side is just as impressive. Over 240,000 followers on X, Telegram groups buzzing with daily activity, Reddit threads full of grassroots support. It feels a lot like Bitcoin or Dogecoin in their early days. Lots of energy, no corporate marketing push.
And in market terms, Kaspa isn't a lightweight. A market cap between $2 and $4 billion, with healthy daily volume north of 25 million, puts it firmly in Binance's usual listing range.
So by Binance's own standards, tech, liquidity, community, Caspa isn't just qualified, it's overqualified, which makes the holdup even stranger.
Here's where the real challenge shows up. Most projects give exchanges a big bag of tokens for free or at a steep discount. That gives Binance instant inventory to work with.
Why do they want that inventory? Because when Binance lists a coin, they need liquidity. If a trader shows up wanting to buy or sell $1 million worth, Binance needs coins ready to go. Without that, the price would swing all over the place.
And those allocations also power the market makers, the folks who place constant buy and sell orders to keep the order book looking smooth. If they don't have coins to play with, spreads get ugly fast.
Plus, free tokens become a profit engine for Binance. They can lend them, stake them, or drip small amounts into the market later.
It's basically risk-free upside.
Kaspa didn't play that game. It was a fair launch. No pre-mine, no pre-sale, no foundation stash. Every single coin had to be mined from scratch, just like Bitcoin.
That sounds awesome for fairness, but brutal for Binance's economics. They don't get a free stash. If they want liquidity, they'd have to buy it like everyone else, straight off the market.
And it's not pocket change. Kaspa's market cap is around $3 billion, with 23 billion coins in circulation. If Binance wanted just 1% of supply, about 230 million KAS, they'd need to spend tens of millions in cash.
Compare that to another project where Binance might be handed 5 or 10% of supply up front. That's pure profit. With Kaspa, it's a risky investment.
And that's the heart of the dilemma. For most tokens, a listing is guaranteed upside. For Kaspa, it's a big financial commitment. Add in regulatory caution and the fact that Binance likes to time listings with bull markets, and the hesitation makes more sense.
The very thing that makes Kaspa beautiful, the fairness of its launch, is also the roadblock to its biggest breakthrough. But it's not like Binance is ignoring Kaspa. First, they launched Kaspa Futures. That let them make money on trading fees right away, without holding any Kaspa themselves.
Then came Binance Pool. That's a clever move. It gives them a way to slowly accumulate coins through mining rewards instead of spending tens of millions on the open market.
And here's something important. Binance has actually been in technical contact with Kaspa's developers for almost 2 years now. People like Wolfie, one of Kaspa's key devs, have been in ongoing discussions with Binance engineers. And recently, those conversations have ramped up.
Here's the catch. Binance has never made an official public statement about why Kaspa isn't listed yet. Everything we're talking about comes from their actions, hints, and what the community observes.
The pattern is pretty clear, though. Futures to test demand, mining to build a stash, technical talks to make sure integration is smooth, and then, maybe, the spot listing.
And don't forget timing. Binance has a habit of waiting for bullish conditions before adding coins like this. A listing in the middle of a flat market would bring less hype, less volume, and less profit. Waiting until a bull run makes the move far more rewarding.
So right now, it looks like Binance is positioning carefully, profiting from Kaspa already, staying close to the devs, and holding back the big reveal until the timing is perfect.
It's like having the car test-driven, the tank filled, and the insurance paperwork ready, but not actually driving it off the lot until the road ahead is clear.
One of the most popular theories is accumulation. A lot of people believe Binance is quietly building a stash of Kaspa, either through over-the-counter deals or their mining pool, so that when they finally list it, they'll already have the liquidity they need.
And then there's the stress test theory. Out of nowhere, Kaspa's network metrics went crazy. Daily transactions jumped from around 50,000 to over 1 million. Active addresses spiked from about 20,000 to more than 500,000.
That's not a small blip. That's like a sleepy highway suddenly turning into rush hour traffic overnight. Some folks say it was just new wallets or apps driving usage, but others think it was Binance deliberately stress testing Kaspa's capacity.
It makes sense. When a coin lists on Binance, the user surge is insane. Millions of traders pile in within hours. Binance would want to be absolutely sure Kaspa's network could handle that pressure before pulling the trigger.
So if the theory holds, Binance may have already run a dress rehearsal behind the scenes, just to see how Kaspa performs under extreme load.
So let's get into the big one. What actually happens if Binance lists Kaspa?
If we look at history, the short-term picture is explosive. Avalanche doubled from $5 to $10 in days after its Binance listing, and trading volume shot from under 100 million to nearly $500 million in a single week.
Solana had the same rocket fuel. Its price nearly doubled overnight, and volume instantly tripled. That listing was basically the spark that launched Solana's climb into the top 10.
Even meme coins prove the point. Pepe doubled in a single day on its Binance listing, with trading volume multiplying 10 times in just 24 hours. That's the raw market power Binance brings.
So, if Kaspa lists, a 50 to 100% spike in the first day or two wouldn't be surprising. Volume could surge into the billions as Binance's massive user base jumps in.
But here's the reality check. A 7-year study covering more than 500 Binance listings shows that, on average, tokens underperform Ethereum by nearly 40% 6 months after listing. In other words,
the fireworks don't last forever.
We saw it with Avalanche. It dropped 60% in the months after its listing before recovering. Pepe gave back most of its early gains in weeks. Binance listings bring euphoria, but corrections almost always follow.
Now, let's imagine Kaspa's big day. Binance tweets, Kaspa spot listing in 24 hours. Telegram and Discord groups explode. Price starts creeping higher just on the announcement.
Then trading opens. In the first hour, the chart goes vertical. Retail traders flood in, bots fire off trades, and volume explodes. By hour 3, Caspa has doubled. By hour 6, the first wave of selling hits as miners and early holders take profit. The hype cools, and the roller coaster begins.
The bigger picture depends on timing. If this happens during a bull market, Kaspa could ride that wave like Solana did, turning a short-term pump into a long-term breakout.
If it happens in a flat or bearish market, it could look more like Avalanche's early days. A huge spike, a painful dump, then months of sideways grinding.
And don't forget Binance's extra tricks. They sometimes launch listings with zero trading fees or staking rewards. If they sweeten Kaspa's debut that way, the hype could last longer and draw in even more retail traders.
But zooming out, the long-term impact is about more than price. A Binance listing makes Kaspa far easier to buy across regions like Turkey and Southeast Asia, where Binance dominates. Institutions start paying attention, and developers feel confident building on Kaspa's ecosystem.
That's the transformation. From a fair launch cult favorite into a globally recognized Layer 1, stamped with Binance's seal of approval.
So here's the bottom line. Kaspa has the tech, the volume, and the community. By any normal measure, it's more than ready for Binance.
But Kaspa's fair launch model flips Binance's usual playbook upside down. No pre-mine, no free stash. If Binance wants liquidity, they've got to buy it like everyone else. That's tens of millions of dollars just to get started.
That's why we see this slow dance. Binance has been talking with Kaspa's team for years, testing things with futures, accumulating coins through mining, and watching the network under pressure.
Yet publicly, Binance hasn't given a single official reason for holding back. No statement, no announcement, just actions and hints.
And timing matters. They're not going to burn cash on a listing in the middle of a sleepy market. The odds are they're waiting for a roaring bull phase, when the hype, the volume, and the fees will all be worth it.
When that day comes, expect fireworks, short-term spikes, corrections, the usual roller coaster. But the long-term impact could be transformational.
Because a Binance listing doesn't just mean more traders. It means legitimacy. It means Kaspa showing up on the radar of institutions, especially since it's already on Grayscale's list of assets under consideration. That's a direct path toward trusts, ETFs, and serious capital inflows.
That's the real story. Kaspa isn't just waiting for a price pump. It's waiting for its moment to step into the global spotlight, to prove what a fair launch project can achieve, without shortcuts.
And when it happens, it won't just change Kaspa's chart. It could change the narrative of what crypto projects can be.
Thanks for hanging out with us on this deep dive.
Until next time, stay curious, stay skeptical, and keep stacking knowledge.